Okay, welcome back, girls. We're just going to start on the second part of this, and this is 2006 question, I should have said. The part B says, prepare an enterprise analysis account for cattle and milk and sheep for the year ended 31st of the 12th, 2005. So, the enterprise analysis accounts are just like profit and loss accounts or income and expenditure accounts for sections of the business, and the business is a farm. So just like you might have a dentist who has a shop, or a golf club that had a bar, and you do a little profit and loss account for the bar, and then you take the profit from the bar and you add it into the main profit and loss account. Same thing goes for the farm here, because the farm could be said to be made up of different types of businesses within the one business. So like there's the cattle business, there's the sheep business, there could be the pigs business. And so what we do is we try and find the profit from the cattle and then the profit from the sheep from individual income and expenditure accounts. And then we just add that into the main profit and loss account for the farm afterwards in part C there, prepare a general profit and loss account for the year. Okay, so I'd say you could possibly do this without me even showing you, but there's one or two little bits that are slightly different to a usual income and expenditure. So let's start with, it says the first one is prepare an enterprise analysis account for cattle and milk. And over here I just have the heading enterprise analysis account, cattle and milk and income we're going to put in there. Okay, so the first thing, or I suppose as usual, we look for income in the receipts and payments account. And what we're looking for here is anything that has to do with cattle or milk, and if it doesn't have to do with them, then we ignore it. So in the lodgement side there, we see start with the bank balance, and then we've milk 28,000. Wait a second now. Oh yeah, milk 28,000. There'll be a little adjustment to be made there, because we saw earlier there was milk check due at the start, and there's probably milk check due at the end. So let's start with that one. So we'll call it sale of milk. Sale of milk, and yeah, let's just do the actual adjustments here first. So from the income and expenditure, or from the receipts and payments account, or lodgements and check payments if you like, it says milk 28,000. So over here 28,000, and then we had money that was due at the start of the year, milk check due 2,400. So that's for milk that you produced last year, so we want to subtract that from the amount you received this year, so minus 2,400. And then if there's any milk check due at the end of the year, as we see there is in point 7 here, milk check was due for 1,800. We're going to add that on because that's for this year, you just haven't received it yet. So plus 1,800. And when we do that, what's that going to be? 6, so that's 27,400, isn't it? 27,400. Okay, here. So next thing, back here we see sheep. We can ignore that. And then there's this cattle figure, 13,000. So that's in the lodgement section. So it's money we got in from the sale of cattle. So again, I'm going to say sale of, and I'm just going to put cattle here. And it said, what did we say it was? It was 13,000, isn't it? 13,000. Perfect. Next thing under the sale of cattle is lambs. That's not to do with cows. Calves. Well, calves, just for those of you who don't know, they're baby cows. So they are to do with cattle and milk. So we'll put them in. So sale of calves, 5,900. So calves, 5,900. Okay. And we keep going down there. What's the next thing? EU subsidy sheep, EU subsidy cattle. Now, if you're not aware, farming in Ireland and really across the world is hugely subsidised by governments. And so when you get grants and subsidies in a farm account, generally speaking, they go into the profit and loss rather than going in as capital payments in the balance sheet, because they are happening on an annual basis. Farms can't survive without these payments. So they are revenue as opposed to capital. So we have our EU subsidy cattle, 2,500, it goes in as income. So EU subsidy. Oh, that's a terrible one. How much did I say? 2,500, wasn't it? Okay, let's keep going down then. Wool, no. Forestry, no. Investment, no. Any money you get from investments will go into the general because it's not cattle and milk or sheep. So that's pretty much it. There's just one other thing that we put in there. Let me see. Actually, is there... No, there's two more things actually. Let me just have a look up here first of all. And this is unusual, I guess, to the farm accounts, these two things. So if you have a look at the start of the year, where is it? Value of cattle, 60,000 it says here. So that was the value of your cattle at the start of the year. And then down here underneath, at the end of the year, your value of cattle was 62,000. Now, if the value of your cattle goes up during the year, then it goes into the income as increase in cattle, or increase in stock, if you like, increase in livestock. So if there is a decrease, it goes in as expenditure. So in this case, it went from 60,000 up there, we see, to 62,000 down here. So increase in stock. And 2,000. So there's a different way you can enter that as well. So you may see it somewhere in a solution where you take the fact that you're buying cattle, and we'll see in a moment we've already seen selling cattle, and we'll see in a moment where you're buying cattle and you have stock at the start and you have stock at the end, and you can do a little mini cattle trading account and put it inside the actual enterprise analysis account. But I think this is a much easier way of doing it, and you're allowed to do it in this way as well. So I think we'll stick with this for now. So increase in stock 2,000. The last thing then that's going to go in here for the income part of this enterprise analysis is, if you look at part 2 there, it says farm produce used by the family during the year: milk 700, lamb 300. So that milk 700, that's drawings, that's milk that the family took from the farm, because you must consider the farm as a separate business to the family themselves. So the family took that milk, so that's drawings of milk, and we treat drawings of milk kind of in a farm account as where the farm is sort of like selling the milk to the farmer, so it's treated like income. So over here we go. Drawings, milk, and what do we say it was? 700. Okay, that should be everything. We just need to tot that up. Okay, and 1, okay, and 5. Okay, so that is terrible writing. That's supposed to be 51,500. Now down to the expenditure. Okay, and the expenditure then, again, we'll start with the receipts and payments account, and we have a look. You can see, just generally speaking there's things like fertilizer, farm expenses, dairy wages, there's all sorts of things there. Now some things are obviously enough cattle and milk, for instance dairy wages. So dairy refers to milk produce, doesn't it, or production. So that's definitely cattle and milk. Other stuff is general, so we need further information about it to know how to divide it up, and we get this down here. And we'll see, if you look at part 3 there, the additional information, it says general farm expenses, fertilizer and vets fees and medicines are to be apportioned 60% to cattle and milk and 40% to sheep. So they're telling us how to divide it up amongst those enterprise analysis accounts. Other expenses to be apportioned 80% to farm, 20% to household. We'll look at that when we go on to part C. Part 6 is relevant here again though. It says veterinary fees and medicines include a check for family health insurance for 650. So that's important. So just to talk about that first of all, maybe we see that you have vet fees and medicines 1,750. That was paid out from the farm bank account. They wrote a check for 1,750 and paid it out, or several checks that amounted to 1,750. But included in that was a check for the family's health insurance, which is not a farm expense. So that's drawings really. The family got that 650 paid for them from the farm account. So that's drawings of 650 euros. Okay, so we'll look at that in a minute. First of all, let's write down what is going in here, and then we can tot up the figures afterwards. So general expenses, general farm. Oh, that's terrible. I'm trying to write and film at the same time. Apologies. Expenses. Next one's fertilizer, isn't it? Fertilizer. Okay. Vets fees. Okay. Dairy wages. And we mentioned this earlier, but if you look up here, we have cattle. It says 14,000. That's purchase of cattle. You spent money buying cattle as well as over here selling cattle. So I'm going to say purchase. Cattle. And I think that might be it then. Okay, so I'm running out of time in this video, so I'm going to continue in the next one.